All right. Hey, everyone. Mark here. Mark P Markets. Thank you for joining me for another Bitcoin video analysis session. We have a few interesting things to go over here. I am simulcasting on TradingView. So let me just pull that over and we can get this thing started, shall we? All right. So, if you're new to the stream, let me explain how it works real quick. So first, I'm going to go over the economic calendar. Second, we're going to go over this Bitcoin situation and basically the title, okay, measuring the profit potential and narrowing scenarios. So that all has to do with price action interpretation. I'm going to talk about that today. And then we can go over some trade scanner situations. All right, the trade scanner called a bunch of shorts on altcoins. A number of them got stopped out. That is something that we could have recognized in advance. And I'm going to show you that. And these type of observations, like I could have told you these are high risk trades. I could have told you that. Of course, now I could say that after the fact, but I could have told you that before the fact. The thing is, we're working on a tool that will allow me to put out these types of notes and put out these types of context in the appropriate channels. We're still working on it. It's going to take a little time, but once I have that available, I'll be able to provide more insight into the trade scanner trades. Okay, but we're going to talk about that here as well. All right, so if you're watching me on TradingView, if you can't see me, make sure you refresh the browser because that usually solves the problem there. Okay, so anyway, let's get this thing started, shall we? All right, so first things first, this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Okay. And all right, let me put this back over here. Okay, so another thing real quick. If you are new to this type of game, you know, whether you're looking to be a day trader or a swing trader, and you're looking for an exchange, consider the links in the description. Okay, there's one for Bybit, there's one for MEXC. Those are affiliate links, all right? Now, when you open an account and you fund an account and you place trades, Stian gets a small cut of your action, right? Of your trades, which goes a long way in helping him to support the community. All the technology that we have and all the technology that we're developing, you know, is a result of his hard work. So it really helps the community out a lot. I mean, we have that app coming where I'm going to be able to share information quickly. We're also going to have the bot is also going to be able to take trades on your behalf at some point. We're working on it. It's on his list of things to do. So we will get there. And people that have these type of accounts are going to be the first ones who have access to that type of connection. Okay, so I just wanted to run that by you. There are also other links in the description you could check out. If you're looking for the trade of the week email, right? We send out emails. If you're looking for a free trial for my signal, you know, the trade scanner or the signal bot, there's a link in the description for that as well. Okay, there's a 1 week free trial there, so you can get all the signals by email and see how you like that for yourself. Okay, so. And there's a lot more value we have coming along. We're working on like curated news channels. I'm not going to get into all of it here, but there's a lot on in the pipeline. Just letting you know. Okay. Anyway, so let's just say hello. Stian is here. We got Tillin, James. Good to see you guys. I guess it's a slow day, huh? No one's showing up today. All right, no problem. All right, so let's first talk about the first thing on the list, and that is the economic calendar. Now, if you should check the economic calendar on Monday every week. For your own benefit. You could check any calendar. It does not have to be the one from TradingView. It could be any calendar. You're looking for certain events, and the purpose of this is to manage risk, right? You're not looking to take trades. You're looking to mitigate risk in trades you may have on or something like that, right? You want to be aware. Now, what do we have this week? Well, we have a heavy week, right? On Wednesday, it starts with Wednesday. We have the FOMC meeting. And the rate decision, that's usually the rate decision comes out at 2 p.m. Eastern time. And the press conference usually starts at 2:30 p.m. Eastern time. That's when markets can get wild. Now, that's important to note because going into the meeting, like today was kind of a weird day, right? If you look at some of these charts, we'll take a look at like the S&P and stuff, right? Today was kind of a sluggish kind of day. That should not be too surprising when we have such a heavy week ahead of us, right? And it's probably going to be like that tomorrow as well, going into the meeting on Wednesday. Now, after that, right? I believe it's on Wednesday or on Thursday. We have the ADP employment report. That's not usually a big deal, but just something to be aware of. Then we also have, I think there was a PMI number in there, a manufacturing PMI. I believe that was on Thursday, which is not a big number, so I wouldn't worry too much about that. But then on Friday, we have non-farm payrolls, which is usually the first Friday of every month, NFP. Non-farm payrolls is also another major market mover, or it has the potential to be. So again, volume can get tricky going into that, okay? So just something to keep in mind. That comes out at 8:30 a.m. Eastern time on Friday. So things can be like tame, and then next thing you know, there's a wild move, right? It can affect the dollar, it can affect Bitcoin, it can affect the stocks, everything. Also, I saw a headline somewhere. There are some company reports, quarterly reports coming out this week in the tech sector. I don't know which companies, but you might want to check that out. If it's something like Google or Amazon, I don't know. It can affect the NASDAQ or S&P. There can be something there to keep an eye on, especially if you're involved in some stocks, especially if they're in the tech sector. Okay, so just something to keep in mind. I don't know which stock specifically. By the way, we are going to have a news channel that's going to have that information. All right, we're working on that again, just to let you know. So you'll be able to access all of that in the community. By the way, there's a free membership as well in the community. There's a link in the description. Check that out. All right, so that's the economic calendar. By the way, that reminds me, this week for students, right? On Wednesday, we're going to have a student meeting for students. Now, I just want to mention something about the student meeting. That is an opportunity for you to ask me questions. It's sort of like almost like a one-on-one session, right? And you can ask me questions about the training program that you've gone through with me. You can ask me about the components. You can ask me about maybe obstacles or problems that you're dealing with in your own journey, right? And I can answer them for you. So that's, if you're a student, please take advantage of that. I'm going to send the invite in the appropriate channels probably tomorrow or Wednesday, okay, early Wednesday. The time of the meeting is usually around 3:30 p.m. Eastern time. So just letting you guys know, it's my monthly student meeting. I do this every month, all right, and that's available to members. Okay, so just wanted to mention that. Next, let's get into the chart, shall we? I'll make the chart bigger. All right, so there we go. Now, so the title of today's stream is Measuring Profit Potential and Narrowing Scenarios. Now, I wrote my TradingView article yesterday. Hopefully you took a look at that. And I want to point something out here, okay? So in my article, I talked about a bearish pin bar developing, right? And a pullback going back to 40K. This was the bearish pin bar. You see it? This is the daily time frame. That was the bearish pin bar. Now, let me ask you guys a quick question. For those, especially for those of you who've taken my training, the bearish pin bar effect, right? Or the signal that comes from a bearish pin bar, has that ever gone into effect? Anyone want to answer that real quick? Okay. Oh, no, no problem, Stian. No problem. Well, all right. We'll talk about that. No problem. I haven't scheduled it yet. So, I like to have you at the meeting. So I'll send you a text. So anyone want to answer this question real quick about the pin bar? In fact, let's go to a 4-hour chart, right? But you see the daily pin bar, right? That daily pin bar was where? Over here in this area, right? In that area right there. That's when I wrote my article, that's basically what was going on. Now, has the pin bar become active? The trade idea that is implied by the pin bar, has it become active? Yes or no? If you don't know, say I don't know. But my students should know this. Anyone want to take a chance at answering that question real quick? Has that pin bar become active? All right, this is the 4-hour. Let's go back to the daily chart. Okay, and now the pin bar I'm talking about is the daily pin bar. All right, you see it? Okay, I don't know, Sean says. Okay, no problem. Hey, Sean, no problem. Anyone else? Negative. Never broke the low. Okay, Kev, you got it. Okay, waiting for pullback, Armin says. All right, so Kev, you got the answer. Never took out the low of the pin bar. Okay, now that's a very important thing. Well, no, the pin bar has closed. We're talking about yesterday's candle, right? It was the bearish pin bar. The current candle never took out that low, which means the sell signal that was developing never became active. Why is this important? Because when you go into the market with a scenario in mind, like I have here, this blue line, these blue lines represent a scenario, the ideal scenario. This is the scenario that I'm anticipating, right? Now, it doesn't mean that the market will agree with me and do what I want it to do. The market does whatever it wants to do, and I always respect the market. But this is one potential scenario out of countless scenarios, and I'm looking for confirmations that we're going to get this scenario. Now, I'm not looking to trade the short. I'm looking to trade the long, which is here, okay, which is a test of 40K. That's the pullback into 40K. Now, the market right now says, I'm not doing that, okay? It developed the pin bar and then takes out the pin bar high. There's nothing for me to do here. So do you understand? Like, this is a game where you let the market lead, right? The market leads, you follow. I never, even if I was interested in shorting this, I never had a short signal. That's where you basically have a set of criteria that helps you make these decisions on objective information, right? One of the points that I made in my article is about consuming information. Most retail traders don't realize that most of what you consume, whether it's news, whether it's other people's analysis, most of it is nonsense. Most of it is the equivalent of watching a cartoon. The most valuable information you can consume is price action from your chart, because it's reality. It's what's going on, and all the factors in the world right now are priced in now, right? So it's the most accurate information that you can base decisions on, especially if you're looking to work on smaller time frames, okay? It's especially important for that. So, right, candlesticks are part of price action analysis. It's telling you it's giving you a pattern of a high, low, an open, high, a low, and a close, right? And certain combinations of that can give us certain information that is a reflection of reality. Now, so we took out the high, and here's Bitcoin pushing higher. Now, we blew through this minor resistance, this old support minor resistance around 42K, right? And now we're fooling around 43K. Okay. I mean, this is not really like a major area. We are right in the middle of this consolidation, as you know. Price action typically at midpoints is highly random. Maybe it goes higher, maybe it turns. But what do I need here to convince me that this thing is going to turn, right? That this thing has any chance of turning around? Anyone want to take a guess at that? What do I need? What does the next candle need to look like? Anyone want to guess? And if you don't know, say, I don't know. I think 35.5 is C wave confirmation, if I'm not mistaken. Okay, Sean, we're going to talk about that. Okay, Armin says break resistance. No, that's not the answer I'm looking for, Armin. It's a good try, but that's not what I'm looking for. Kev, does this change your idea of the broader C wave? These are good questions. I'm going to answer these questions in a moment. Real quick, Kev, no, it doesn't change. This does not change my my scenario for the C wave, and I'll explain why. But okay, so you guys aren't seeing it. Now, let me explain something. We see something on the chart right now. We see the present moment, but we have to think of the future. We can't forecast the future, but we have to think of a possibility of what we want to see. If this thing is going to reverse here and give me another bearish type of signal, I need to see a bearish pin bar here, or at least some type of bearish candle. That can take an entire day to unfold, okay? Because I'm looking at a daily chart here. So you see, if I get this daily close tomorrow and it's red, especially if it's a pin bar, or if the current candle gives me a pin bar, I'm going to be looking at those lows, right? Those lows, we take out one of those lows, we have our sell signal. Now, that is good for day trades and aggressive swing trades. Why? Because this is not an ideal resistance level. For day trades, it is, because you're only looking to make a couple of 100 points and you're out. Okay, cool. But for a swing trade, this is the midpoint, right? So anything can happen here. It's highly random. For more ideal or more conservative swing trades on the short side, you're looking at these areas for shorts. We're not even near there, right? That's the 45K and above. We're not even near that. So that's not even in play right now. So you follow me? Like, I'm always, when I'm talking about scenarios and narrowing ranges, I'm looking to basically anticipate what the market's going to do. And the market either has to show that to me and confirm it for me, or it does not. It's either one or the other. And if it does not, I stand aside, right? Because my plan, if I was going to short, my plan would be to short. I don't short Bitcoin, especially on this time frame. But if I was looking for longs, it's the same idea, right? Now, let's talk about the long scenario. So you guys get it? So I know some people do like to short Bitcoin. That is what you should be looking for if we're going to get this scenario. So this scenario right here is not out of play yet. The pullback to 40K is not out of play yet. It will be out of play if tomorrow's candle looks like that. Now you see, I'm showing you two scenarios here, two possibilities. We can either get the bearish candle, or we get a continuation higher. Or maybe we get kind of something in between, like a doji or something, right? The doji would be a bearish sign because, again, we have resistance in this area, but it's minor. That's a minor resistance area, right? Minor means it carries less weight. Minor means there's more of a chance it gets blown through, right? So this helps to shape expectations. You follow me on that? So let me answer some of these questions here before I talk about the bullish scenario. Right, because this is the bullish scenario right here, the test of 40K. Now, so Kevin asks me about the broader wave C. Does this move change the broader wave C? No. This could be, Kevin, this could be a B wave, okay? This can be the corrective bullish B wave before the continuation, right, of the leg lower. So let's go to the monthly chart real quick, because that's where I come up with this C wave idea, right? And this is the monthly. And on this monthly chart, as you can see here, we have three legs, right? From this low, we have three legs, and we're fooling around. The numbers jumbled up. You can't really see the candle. You can't really see that, but it's kind of got a pin bar sort of thing going on there, but it hasn't taken out any lows, right? What is the magical low? 38.5. We take out 38.5. That's going to add more weight to the C wave scenario on the monthly, right? And that would be this type of pullback. Again, I have to point out that type of pullback, this is not a forecast. This is just one possibility of many. It may not pull back to 15K. It may only pull back to 35K. It may not pull back at all. But I'm looking for confirmations, right? The first confirmation will be the break of 38.5. That will confirm, that will further confirm or add more weight to the argument that this broader C wave is in play. If that broader C wave is in play, you need to be aware of that, especially if you look into dollar cost average. Tillin asked a question earlier about dollar cost averaging. And part of that, I'd like to answer that question in more detail, but first let me get through the stream and then I'll answer that. It's a good question, but to kind of touch on that, dollar cost averaging, if you're not aware of the general context, the mistake you're likely to make is you're going to dollar cost average too early, and you're going to build a position that's too big too early, and you expose yourself to all of this risk, right? And that's usually what leads to getting margined out. All right, so that C wave situation is still in play. In order for it not to be in play, we're going to have to take out this 50K high, right? That will then cancel it out, or at least take weight off of it, right? Understand, like I said in my previous stream, there are always three arguments that we're constantly adjusting, right? There's always a bullish argument, there's always a bearish argument, and there's always a range-bound argument, but they're not always equal, right? So sometimes you're going to have a stronger bullish argument. Sometimes you're going to have a stronger bearish argument. Sometimes you're going to have a stronger range-bound argument. We're always trying to confirm and add weight or take weight away from these arguments so we have a better idea of what side we should lean on or what side we should expect more from. Just because the market is generally bullish doesn't mean we have to take longs all the time. There may be some short opportunities, but you have to understand that in that context, you have to expect less. You have to understand that that trade is more likely to be a stop out. So that calls for certain types of adjustments, right? Smaller size, lower expectations, smaller time frames, right? This should automatically come to you when you're like, oh, I'm taking a counter trend trade. Okay, so here's how I need to adjust my risk parameters for that. All right, so let me just take a look over here. What's going on over here on Maracoin, Riot, a little bullish. Okay. You could be correct, as there is a huge up momentum. Okay. Yeah, I'm just looking at TradingView over here. Look, the Fed will pause. If everything is if, right? We don't know what Chairman Powell is going to say unless you had a personal conversation with him and he told you. But if you're saying that you're guessing he'll pause, we don't know. We have to see what the Fed comes out with. But the Fed can change things dramatically. A lot of times they don't. A lot of times whatever he says is expected, so you don't see much of a move. But it can have a dramatic change out of nowhere. We have to be prepared for that possibility, right? I don't try to pretend I know what he's going to say or what he's going to do. He has to come out and the market has to price it in, and then I adjust. We're always adjusting. I'm always adjusting. I don't pretend to know more than the market like so many people. Okay. In fact, I'll be the first to tell you I don't know anything. The market tells me what to think and it tells me what to do. All right. So a key aspect of this game is recognizing when you're wrong. A lot of people don't have the ability to do that because they hang on to things like ego. They hang on to things like, hope and all that kind of stuff. And they don't recognize wrong. When you're wrong, you have to get out. That's it. This is not a game about being right. It's a game about recognizing when you're wrong. Because when you're right, you just let the market pay you. Okay. So anyway, all right. So that's this Bitcoin situation. Now I described the bearish possibilities, right? Which is this minor pullback into 40K. Now, 40K never really broke. This 38.5 doesn't count. Why? Now, what I'm describing here is context. Technically, it broke. We went to a 38.5. That's a break of 40, isn't it? Yes, it is. But look how swiftly it recovered, right? When it recovers swiftly like that, that means it's a false breakout. This was a fake. Anyone that shorted that knows what I'm talking about, okay? So any retest of 40K, this support area is still in play. 38.5 is the extreme low, okay? But anywhere between 40 and 38.5, we get a bullish reversal. If we get a pullback, we get a bullish reversal in there, I'm going to be very interested in longs, and I'm going to look to try to call a swing trade long, all right, on that type of situation. Does that make sense? So in order for me to see that, you have to understand, if we pull back into 40K, all right, now let's see if people have been paying attention. If we pull back into 40K and I want to go long, right, I'm interested in a swing trade. Should I just buy? Should I just put orders out there? Oh, we're at 40.5. I'm going to buy. Should I just do that? Or should I do something else? Anyone want to tell me? This is the interactive portion of the stream here. Make sure you guys are listening. Let's see. And you guys can always say I don't know as well. That's also an answer. Okay. Armin says I should just step into it. Okay. Anyone else want to answer that? BTC became very dramatic like it used to be. That's true, Kev. Yes. It's always easy to lose money fast. I print billions. That's a nice name. Okay. And what are you doing here? Because I don't print billions. Are you here to learn how not to print billions? Okay. Okay. So Sean says no. Wait for an inside or outside bar. Peter says wait for confirmation. Okay. So Sean and Peter, yes. So it's not a good idea. Stepping in front is aggressive. Is it something you should never do? No, it's going to depend on how aggressive you are. I personally don't like to do it because I've been screwed many times. Okay. Stepping in front thinking, oh yeah, it'll hold here. And then it's just like it just goes in a straight line and you're caught in it, right? I prefer to wait for some form of confirmation. Just like I was describing the bearish pin bar over here or the bearish action there, I would want to see a bullish confirmation here. It could come in the form of a pin bar. It could come in the form of an inside bar. It could come in the form of just a green candle. Okay, that's acceptable. It may not be the perfect reversal candle, but it would be a higher low. Okay, in an area where a higher low is likely to develop. So you see, I'm ahead of the market. I'm thinking ahead of the market, but the market needs to show me what I'm thinking, and then it needs to confirm it. And then once I have all of that in place, I can justify taking risk. At that point, I could measure my stop. I know where my take profit potential is. Okay, and that's part of today's stream. I mean, you're using levels to gauge risk and profit potential. If I'm getting long here, where am I gauging profit from? Anyone want to tell me? And does it have to be just one level? Anyone want to tell me real quick? Some of you guys are on it. Let's see. Let's see what you guys are saying here. Could be a long-term buy under 40K. Possibly, but that's not when we're talking about a longer-term buy. That's when you want to take a look at your weekly and your monthly charts. Okay, and as we saw with that monthly chart, if 38.5 breaks, it's a risky area for longer-term buying, in my opinion. Just looking at that level on the monthly. Right? Longer term buy levels are like 30K, 25K, 20K, 15K. Those are long-term buy levels. Right now, we're fooling around basically near resistance levels. So you have to put it into context. Okay. I would say, if you're buying below 40K, it might be good for like a couple of months time horizon, not a couple of years. All right. Because there's just so much opportunity for this thing to go lower. Especially if that C wave decides to unfold. Okay, the risk is very high for long-term trades at these levels, just like the S&P, which we're going to talk about here in a moment. Okay, wait for the reversal. Take the low out, close above the high, then look for the low. Okay, you're confusing me there. I think I understand what you're saying. Okay, we need support to retest to hold. So, well, you can get the failed low, you can get the double bottom on smaller time frames, but the main thing is on the daily time frame, right? I'm not looking at smaller time frames here. You can get the push to the low followed by the reversal right off of that. But ideally, I just want to see a reversal candle, and I want to see it around that 40K area. Okay, I don't need too much complexity. You want to know why? Sometimes I say we need to see a complex reversal. When I say that, when we have a sharp move like this, right? But we don't have a sharp move like this. We have a move that's kind of jumbling. It's not a straight line. We don't have one gigantic candle that looks like that. When I see a gigantic candle, one candle, then I want to see more complexity, right? But we don't have that. In fact, we have a lot of support fooling around here at 40K. So any retest of it, followed by a simple reversal, would be acceptable. Do you understand how I'm doing that? Like, sometimes I'm looking for complex, sometimes I'm looking for simple. It depends on what the market's showing me. I look for complex when I see a sharp move, because that sharp move that momentum may continue. And I don't want to take one single candle reversal and then get caught in the momentum, right? Which can continue. An inside bar after a move like this can easily be a sell signal, right? So just an important point. So you guys are following along pretty much. Now, so you guys get that? Now let me see what's going over here on TradingView. I see a lot of typing over here. Okay. Okay. Then I count. We 46 and then go. Okay. Don't think in absolutes. Okay. The wave count, like, see, I have a wave count in my chart here. This wave count is over now, right? Up to 5, and I should take it off my chart. And this is an A wave. I should put that. I mean, this is an A wave, but these are minor waves. These aren't major waves, right? And this is possibly a B wave of the first broader A. So if we get a C, that would be the broader A wave, okay, of the broader correction. Anyway, wave counts are just good basically for a general idea. When I'm dealing with wave counts, I'm not getting caught up with details. I'm only looking for wave 4s and wave 5s. That's it. Okay, that gives me a sense of potential. Whenever I see 5 waves complete, that's why I drew this resistance up here. Whenever I see 5 waves complete, the party's over. And I warned people about this weeks ago. I said, don't be going crazy here at 50K. You could see my analysis on TradingView. I warned people in the community, right? And the 5 waves completed, and we got the pullback. Okay, so it shouldn't have been a surprise that the potential was over. Meanwhile, if you looked and consumed all the mainstream nonsense out there, they're telling you things like it's just getting started, blah, 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 right? You know what I'm talking about. Okay, so yeah, don't think in absolutes. Everything is always if. Okay, so now one thing, so you guys clear on that? So basically, if I get long the 40K, I'm only eyeing 45K, right? If the market can get back there. But there are other levels. You don't have to eye the major resistance. 45K to 50K, this entire area is the major resistance zone. It's a zone. And the market can turn anywhere inside of that zone, right? But there are minor resistance levels like this midpoint area, okay? There's minor resistances there. So if I get long at the 40K area, I'm eyeing 43, 44, and 45. That's where I'm looking to take profits. I know this in advance. I'm not sitting there fumbling with it. Oh, is the market going to go higher? Should I hold? No, I take something off the table. If I suspect or if I want to give the market a chance, I don't take all of it off the table. I take some of it off, and then I let it ride and see how far the market wants to go. As soon as I get a conflicting signal, I get out. Okay. Now, conflicting signals are hard to recognize, but usually it's a candle, it's a reversal candle going the wrong way. And if you see that at a resistance level and you're long, it's probably a good idea to reduce most of your position. Okay. Not all the time. Sometimes you're going to get faked out. But again, you shouldn't see, like right now, for example, if this market right now is going to continue higher, we should not see a bearish pin bar develop. Okay. Or something like that. I mean, look at this move over here. Do you see any bearish candles inside of that move? No. And the move just went vertical pretty much, right? So if the market's going to do something like that, it should not produce a bearish candle and close, establish the candle, and then take out the low. It should not do those things. Now, markets can get noisy. You can have all this kind of stuff. That's just what happens, right? That's why it's a good idea to take profits when you have some. And if you want to let the market ride, like for example, this general trend in Bitcoin is still bullish, okay? If you want to give it a chance to another high, that part is up to you. There's nothing on the chart that's going to tell you that it's going to go to that new high. All we have is a general trend, right? Higher lows and higher highs. So a higher high is somewhat likely, and you have to take the chance, okay? You have to see if we get there or not. That's the way to do that, okay? Okay, so now let me go over real quick. I want to go over a couple of things like S&P, right? Because there's some learning points. Any guys have any questions about this Bitcoin situation? Have I made this clear? So you guys, let me just go back and look at this chat real quick. Right, so Sean, 38.5 C-wave confirmation. Right, so I answered that. You got that, right? If we take out 38.5, it adds to the argument that, you know, much lower prices are coming. Okay, so I answered that question from Kev. Now, Tillin had a question here. Tillin, about his question here. Here's Tillin's question from earlier, right? When to dollar cost average and how? SPX is at all-time highs again, and high-risk markets should follow. Seems like good communicate. Right, so let's go to the S&P real quick, right? SPX. USD. Let's go here real quick. Look at this. I mean, talk about ridiculous, right? And it's also, it may be hard to understand this when, you know, we have like inflation problems and blah, 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 blah. But there's fiscal policy has something to do with this. And there's a few things going on. Also, keep in mind, the S&P, the NASDAQ, you know, the Dow, all these index products, understand that they don't represent the entire stock market, right? The entire universe of stocks has to be like what, 8,000, 10,000 stocks, something like that. All right. And this is a tiny fraction, but they're the biggest companies, sure, on the S&P 500 and the most successful, blah, blah, blah. But they are a small group. So this doesn't reflect the entire market. It reflects a subsection. Of course, the S&P is broken up into sectors, right? What is it, 12 or 13 sectors, I believe? Right, and each sector represents a different part of the economy, or you know, it's unique part of the economy. But again, this is still not the best representation. And there can be a situation like we had with the trade scanner, where the S&P is going up the entire time, yet the trade scanner gets stopped out of 25 stocks, all long. How could that be, right? The S&P is making new highs, all-time highs, and I'm looking at 25 stop outs, right? What's going on here? Longs, not one of them was short. So that tells me that they're not correlated. A lot of stocks are not participating in this, right? First of all, that's important to know. Second, let's go to a weekly chart, okay? I mean, look at this, right? Or let's go to a monthly chart. Forget the weekly chart. Let's look at the monthly chart. This is the monthly chart. Look at this. Do you think that this is a good place to be investing? You got to be out of your mind, okay? When things look great, that's usually the absolute worst time to get involved. That's always going to be the case. I'm always going to tell you at highs, never buy highs, okay? Especially if you're looking to invest. So if you're interested in dollar cost averaging, and this is what your chart looks like, first of all, you need to find areas, well, where is the support? We're certainly not near a support right now, nowhere near a support. The first support on the S&P is 45.96. We're basically 46. We're at 49.23 right now. That's 300 points lower. This is your first support. That's your first one. Okay. Your second one is here in this area. What's that higher low? 41.02. So 41 even. That's 900 points lower than where we are now. Those are the places where you should consider accumulating, right? Not now. So the risk is enormous here. The higher, when these things push highs, the risk increases. Does that make sense? So if you're looking at day trades and you're looking at short-term swing trades, okay, you're in, you're out. If you're wrong, this thing turns, you get stopped out, no problem. But if you're trying to invest and you think, oh yeah, this thing's a good time to invest, you're out of your mind, okay? You're taking all the risk, and everyone that got long in these areas are happy to give it to you. So I'd be waiting for supports, right? And all the index products are going to look like this. So I wouldn't go near these markets for dollar cost averaging. Does that make sense? So you need to be aware of your context. You need to be aware of your levels, and you need to predetermine in advance what your strategy is. Like, are you looking to hold for a couple of years? Are you looking to hold for a couple of months? You need to know this in advance. And then you also need to know, well, how much are you looking to invest? Because then you can split that up into smaller segments, and then you can start figuring out where you want to put those, right? When you want to put those orders in the market, right? And you can use that in that situation, since you're going fraction, right? You're going fractionally smaller. You're not going all in. You're going smaller. You can put limit orders and just step in front of the market because they're smaller positions that you're looking to accumulate over time. You want to make sure you do that in smart areas. If you do that, like if you pull up a 5-minute chart and you're like, oh yeah, I'll just buy over here because, you know, it looks like a support. You're buying up here, right? On a 5-minute chart, and you're taking all the risk. Like I said before, the common mistake is people getting too big too fast because you misunderstood the levels. All right, or you had no sense of context and perspective, right? And that's one of the things that, you know, again, I want to be able to deliver to people that are in the channels and stuff like that through the technology that Steen is working on. All right, so you guys follow me on that? Let me see what else we got over here. So I answered your questions on that stuff. ROIV, is that a stock, Sean? Let's take a look over here. So real quick, all right, before I wrap this up, I want to touch on the trade scanner. So if you're not familiar with the trade scanner, the trade scanner is my bot, okay? And it takes trades. It sends trade ideas out by email. We're working on the bot being able to take trades on your behalf. It trades cryptocurrencies, it trades Forex, and it trades stocks. You could see the track record. There's a link in the description. We have a track record of all of its trades. Now you'll see some red mixed in there. That's part of the deal. It happens, right? But we shouldn't see 25 in a row. That's unusual. So that's why, you know, we're looking into that, and part of that has to do with volume, right? I've determined part of that has to do with volume and stuff like that. But the point is, I want to point out all this stuff that I just mentioned about context. The reason why it's important, especially if you're using the trade scanner, is because the trade scanner called a bunch of shorts right here. Let's go to the 4-hour chart. So the trade scanner called like Dogecoin, Litecoin. It called a whole bunch of them. Matic, I think, all short, right, in this area. And the short actually was called here, in this area here. Now, how you handle that is going to depend on how well you can read context. Now, like I said before, this area on Bitcoin is a minor resistance area, right? It's not a major resistance. And it's coming off of a major support area. So you tell me, do you think you should be shorting into supports, major supports, or not? How much is your scanner subscription? It depends on how much time you want, but the monthly is $59. It's $59 a month. There's a 1-week free trial on that if you want to try it out. If you want it cheaper, you just, if you pay for more time, like quarterly or yearly, it's a lot cheaper. I mean, the cheapest is $38 a month, which is pretty cheap, if you ask me. There's people out there charging $150 a month for nothing. Anyway, so let me ask you guys this quick question. All right, and let's go back to the daily chart so I can illustrate this. After everything I just talked about, do you think it's a good idea to sell into a major support level or near a major support level? Like, do you think that's a good idea? Yes or no? And then I have a follow-up question to that. Do you guys think it's a good idea to sell into a major support level? No, it's not. So when the bot calls shorts near a major support level, you should automatically think, these are probably a bad idea to take these. In fact, I'm trying to figure out a filter so that the robot can just filter it out for you, but I'm not there yet. But let me ask you this question. Here's my follow-up question. Were you guys aware, before I mentioned it, were you guys aware that 40K was a major support level? How many of you were aware and how many of you were not? You can answer that question. And if you weren't aware, it's okay. I'm not going to make fun of you. How many of you recognized 40K as a major support? How many of you knew that? Sean knew that. Anyone else? Anyone else? You guys, so basically my point, the reason why I'm asking that question is because you don't need any kind of magical tool to recognize that 40K was a major support level, right? There was nothing special. You don't have to have 50 years of experience to figure that out, right? So you have a piece of information, context, that can help you filter things like short signals that are going into, like, you see a short signal at 42K, 41.5. I don't know if I should take this as a short, right? That's my point. It's not hard for you to see major support and major resistance levels. You simply pull up your daily chart and you look. Oh, look how many times it touched 40K. That's a major support. Wonder where the major resistance is. Anything above 46K, that's probably a major resistance, right? That's easy to see. Use that information so that when something is calling shorts in the area, you go, oh, I got context here. This is a bad idea to short. Okay. Now, with that said, when you're going to the smaller time frame, okay, let's just look at where those shorts were called. They were called here. That's where the shorts were called. Now, that was a minor resistance, not a major one, right? Were those shorts completely unreasonable to take? No, it's going to depend on your aggressiveness or how conservative you are. If you're aggressive and you say, all right, you know what, I'm willing to give it a try, but it's a low probability. You want to give it a try, maybe it works out, but it's probably not going to work out. So how can that help you if you know that? Well, if you go short, let's say you took, I don't know, Ethereum or whatever one of those shorts, or a Litecoin, it called a whole bunch of them. Let's say you took one and the next candle you get is like bullish, like this. That's not what you should see. So what do? You get out. You don't wait for the stop. You just get out, take the loss, because that's not what it should be doing. If it's a short, next thing you should be seeing it here, pushing back to the level. That's where it should be in a candle or two. If you're looking at a 4-hour chart, right? Not this. You should not be seeing this, or at least the beginnings of it. By the time it gets there, you're stopped out. Okay, does that make sense? So that's when you recognize a conflicting signal. Like, that's not what it should do. So the trade idea begins with, are you aggressive or are you conservative? If you're conservative, then you should not be taking shorts into a support. If you're aggressive, maybe there's some momentum, you want to give it a try, automatically that should probably go a little smaller than usual. You should know that as soon as it goes wrong, get out, because chances are it's going to go wrong, right? But there is a smaller chance it may go right. Right? Again, there's no way to know in advance. But if you use context and you follow the market and you let price guide you, you'll be better prepared to make these decisions with confidence, right? Instead of like, oh, I'm confused, I don't know what to do. And then it goes right to the stop, right? There are opportunities to get stopped out earlier. There's nothing wrong with that. Okay. I mean, I can't program everything I just described. I can't program that into the bot. All right. So, but I am considering a filter to at least maybe identify these levels, these major levels, so that the bot doesn't call anything. All right. But in the meantime, I want you to be educated, informed enough to see this for yourself. And it's not that hard. Again, major support, major resistance, levels. That's the second component of my training program. Many of you have taken. Okay. All right. See, I don't know what's going over here on TradingView. Okay. Just looking over there. I don't see. Okay. All right. Okay, cool. So you guys follow me? Imtiaz, you are one of the best. I appreciate that. Bot might need to take into account BTC levels and call shorts based. Well, see, here's the thing, Imtiaz. Here's the thing. If I put too many filters on it, it won't call anything. So some bad trades are going to get through because otherwise there'll be no good trades, right? So there are ways, though, to use context and use our own judgment so that we can at least minimize what the bot, if the bot's doing something that is a lower probability, we should recognize that. And then we can adjust our own behavior based on our assessment, right? The bot basically, it follows momentum and it can tell us where a setup is. Oh, there's a setup to go short here. Oh, there's a setup to go long here. But does that long or short make sense in the context of the market? That is the answer. That is a question that we must answer. And I realize a lot of people don't have the experience to answer that question. So I'm making an effort to try to provide the context, right? And that's why Steen here is helping me. He's putting together an app that will allow me to share information quickly, so I can put this information in the channels, right? So if you're in a channel, it pops up. Oh, the shorts came out, and then you see one of my notes. Oh, these shorts are low probability. And here's why. Oh, now you know. Okay. Hopefully I got to you before you took a trade, but sometimes I won't be able to do that. But the point is, I'm going to be putting more context in the community quickly and conveniently. It's going to take a little time. He's still working on it. But when I'm able to do that, you say, well, why can't you just put it in the community just by going into the server and just typing it in? Because I'm looking to put it in multiple places at the same time. So that's why. Anyway, it's complicated, but it's being worked on, and I will have a way to communicate better and provide this context so that you don't have to struggle and figure this out yourself while you're learning. Okay. Anyway, what about considering gold? Okay, gold. Well, hold on. Before I get to that, let me see, how am I doing with time? All right. I talk too much, people. I talk too much. Let me see something here. I saw some people asking me some stuff earlier on YouTube. Was it Sean? Yeah. Hold on, Sean. Sean had a question. ROIV. All right, I'd like to take a look at gold, but let's take a look at ROIV real quick. ROIV. Anyone in Bitcoin, by the way? Anyone in any of these trades? And anyone short any of the altcoins? Anyone want to share that information? Let me know. All right. So ROIV, let's go to a weekly chart. And by the way, if you like my stream, do me a favor, press the like button, press the subscribe button on the channel, press the boost button on TradingView. And also, if you can, leave a comment in my channel, in the stream after the stream is over. That helps somewhat, but obviously I need thousands of comments. I'm not going to get thousands of comments. But I guess anything, little thing helps. So Roivant Sciences. Okay, so it's a biotech, I'm assuming. All right, so here's the thing with this. You have a higher low pin bar developing on the weekly. So obviously the current candle is the current week we just started. We have to see how this candle closes. Let's go to the daily chart. But it looks like a higher low formation. Look at the daily. All right, so you have this gap situation, and you're getting this pin bar. It looks like a little mini double bottom. So it's worth a try. If you're looking for a swing trade long, okay. I mean, you have the higher low. You can measure the potential by looking for the higher high, this area right here, over the next few days. If you have the S&P and NASDAQ going your way, I mean, obviously, the markets have been generally strong, but this may not be highly correlated since it's a biotech. Usually these things tend to do their own thing, but the formation makes sense. So where this thing would be wrong is if it takes out that pin bar low, then if you're in it, take your loss, step aside, and wait for this thing to settle. But it's not a bad idea if you were thinking long, Sean. Not a bad idea. Nice one. Where'd you come up? Day trade. Okay, yeah. So that makes sense. Where'd you get that from? Is that from the trade scanner, or is that something you found on your own? Okay. All right. So anyone else? Anyone long anything? Great show. Thanks, Bart. Okay, let's take a look at gold real quick. Oh, you got that from the scanner. Cool, cool. See, the scanner does something, right? Stupid robot. All right. No, I'm just joking. The robot's not stupid. It's not AI. Okay. It's not smart either. It just follows instructions. All right. Let's take a look at, but that makes sense. This situation makes sense. Also, Sean, when you're dealing with that, also always take a quick look at the 4-hour, because a lot of this is a heavy weight for the bot, this time frame. Okay. But I like this formation. You have a nice double bottom situation here. Okay. Anyway. Yeah, so that makes sense. Let's take a quick look at gold. Let's go back to the daily chart and let's take a quick look at gold. XAU USD. All right. So now gold, here's the thing with gold. Don't get all caught up with all the drama and all the nonsense and all the economic talk. Don't get caught up with that. Again, price action. So this is a daily chart. Okay. This is clearly a consolidation. This is your support level right here. What is that? 2005. So that's basically 2000. We can round that to the 2000 level. That's your general support right there. Right? General resistance is up here. What is that? 2058, 2060, right around there. That's your consolidation. You're inside of a consolidation. Okay? And that's what it looks like right there. So buying or doing anything with this right now is going to be tricky because it can go either way. You're basically in the middle of the range. So not a good place for new positions. If you're long gold, anytime it goes up to these areas, you should be taking something off the table. I know everyone thinks gold is going to be at 5,000 because there's all kinds of hype. Gold is always overhyped. You have to be careful. You can't get caught up with that. Oh, we have inflation. Oh, gold has to do this. Gold is just going to do whatever it does. So don't get caught up with that. Now, if we have a dovish Fed on Wednesday and we have an NFP on Friday that points to inflation, you're probably or actually lack of inflation, you're probably going to see a stronger gold, most likely. But I wouldn't trade on that. Okay. Again, so look at levels. Any retest of that 2000 area, look for a reversal to go long. Okay. Otherwise, avoid. And I wouldn't short gold. All right. Gold is definitely not the best idea to short unless you're looking at day trades. I mean, let's look at a monthly gold. This is gold on the monthly, right? I mean, look where it is. It's at its range high. Look at that. The month before, there's a pin bar. Okay. We take out that monthly low, that could be problematic. So generally speaking, if you're thinking about investing in gold, these are the worst levels to invest. Now, again, like I said, I wouldn't short it anyway because gold can be tricky. But if you're looking at day trades, then anything goes with day trades. Does that make sense? But if you're looking for bigger picture, this kind of gives you a sense of your risk. Your risk is high for longs, okay? And shorting is always a hard thing to do with these markets because if there is some kind of surprise news, this thing can go vertical, right? That's what you have to be careful of. People don't realize a chart tells us history, right? The chart does not tell us the future. News can come out of nowhere and surprise news that no one's expecting, and you can get a spike out of nowhere, and you don't want to be on the wrong side of that, right? It changes the chart completely, and you're like, I had no idea, right? Because the chart doesn't show you the future. All right. When we use charts, we're basically using historical information to try to project or narrow the range of possibilities in the near future. And at the same time, getting a sense or quantifying risk using historical information, right? That's the best we can do. We cannot project the future. We don't know the future with any degree of certainty. So we have to look at areas where probability is more in our favor, and we have to recognize areas where probability is less in our favor. All right, and basically probability being less in our favor are the random areas like middle of the range with gold. Does that make sense? Okay, cool. All right, so I've been talking for an hour. You're long Bitcoin. Okay, cool. All right, so I mean, so far so good. You know, you should be eyeing 45K and basically see if the market delivers that. If it gives you a hard time, at least trail a stop or something. That's what I would suggest. You know, protect your profit if you have a profit in that. Okay, cool. BA called gold to 2,400. Okay. Yeah, those people that call those, that make those ridiculous calls, I'm sorry, they're ridiculous. All right, because no one knows. They just come up with this stuff. They base it on whatever. Maybe it goes there, maybe it doesn't. But you have to make your own assessment, and you should make that assessment based on price structure and levels. That's the best information we can work with. All right, you guys. So I'm going to wrap this up. Again, if you have any questions, you know where to find me. Also, check the links in the description. Join the community. There's a free area. We have a community chat. There's a lot going on in there. And like I said, we have a number of things, improvements in the pipeline to make your experience better. Okay. So if you have any questions about anything else, if you'd like a free trial of the trade scanner, all the information is in the description. Okay. So check that out. Again, I want to thank you all. Enjoy the rest of your day, the rest of your evening, wherever you are in the world. And thank you very much for watching.